Every time you hear the words crypto regulations, it's often followed by words like ban, tax, or control. But here's the secret. No one tells you governments aren't just regulating crypto, they're protecting themselves from it. Why? Because cryptocurrencies don't just threaten banks. They challenge entire systems of power. In this video, we'll break down the hidden motives behind crypto regulations, what governments say publicly versus what happens behind closed doors, and most importantly, what it means for you, the everyday investor, innovator, or dreamer. Stick around, because by the end of this video, you'll see why regulation isn't always about protecting you. Sometimes it's about protecting them. On the surface, regulations look noble. Governments say, we want to protect consumers from scams. We want to prevent money laundering and terrorism financing. We want to stabilize the economy. Sounds good, right? Who wouldn't want safety? But here's the first hidden truth. Regulation is rarely about you. It's about control. Let's rewind. When banks first came under government regulation in the 1930s after the Great Depression, the stated goal was protection. The real goal, preventing people from pulling money out of the system. Now fast forward to crypto. Bitcoin was built to bypass banks. Ethereum, stablecoins, DeFi, they all cut middlemen out. That scares governments more than scams ever will. Let's talk money taxation. Governments love talking about consumer protection, but the biggest hidden motive for regulating crypto is tax revenue. In the US, the IRS now requires exchanges to report user activity, just like stockbrokers. In Nigeria, South Africa, Kenya, governments have been scrambling to figure out how to tax digital assets. In Europe, the MiCA framework requires strict reporting rules. But ask yourself, why now? Why not earlier? Because crypto grew so big, the governments realized they were losing billions in untaxed profits. They'll tell you regulation is for your safety. But the truth, it's for their treasury. If you profit from Bitcoin, they want a cut. And here's the irony. While they warn you about crypto being risky, they keep printing money that devalues your savings every single year. Now, here's the scariest phrase governments use: national security. They say crypto is used for funding terrorism, laundering drug money, hacking operations, and yes, some criminals do use crypto. But here's the uncomfortable truth. Over 95% of global money laundering still happens in fiat currency in banks. That's the UN's own statistic, but you'll never see a government admit that. Why? Because it's easier to demonize crypto than to expose how corrupt the traditional system is. And guess what? Many governments secretly use blockchain themselves. The US has seized billions in Bitcoin from hackers. North Korea allegedly funds its weapons program with stolen crypto. And central banks worldwide are building CBDCs, central bank digital currencies. So ask yourself, if crypto is such a danger, why are governments adopting the same technology they tell you to fear? This brings us to one of the biggest secrets: CBDCs. Central bank digital currencies are government-issued cryptos. Sounds modern, right? But here's what they don't tell you. CBDCs aren't decentralized like Bitcoin. They're fully controlled. Every transaction can be tracked. Your access to money can be turned off with one click. Imagine this. You criticize a government online, and suddenly, your digital wallet gets frozen. You overspend your carbon credit allowance, and your money won't buy gas. This isn't science fiction. It's already happening. China's digital yuan is live. Nigeria launched the e-naira. The EU is piloting a digital euro. So while they warn you about Bitcoin's dangers, they're quietly building their own crypto to lock you into a new financial cage. Let's go deeper. Regulation is often used as a weapon. Take the USSEC. Instead of creating clear rules, they sue companies like Ripple, Coinbase, Binance. Confusion isn't an accident, it's a strategy. Why? Because uncertainty drives small innovators out, leaving only big banks and government-approved corporations in the game. It's not about banning crypto, it's about capturing it. And in developing countries, it's even worse. Some governments ban crypto, not to protect citizens, but to force them into using weak national currencies. People in Zimbabwe, Argentina, and Lebanon rely on crypto to survive hyperinflation. But regulators crack down because it exposes government failures. So what does all this mean for you, the everyday person? It means expect stricter rules. Taxes, reporting requirements, and surveillance will increase. Self-custody is king. If your crypto is on an exchange, it's not truly yours. Regulators can freeze it. Innovation will survive. Every crackdown sparks new solutions. DeFi, privacy coins, decentralized exchanges. The game keeps evolving. Knowledge is your power. The less you know, the easier it is for governments to scare you. Crypto isn't dying, it's adapting. And those who understand the game will thrive while others panic. Governments will keep telling you that regulation is for your protection. But now you know the truth. It's not just about safety, it's about power. It's not just about crime, it's about control. And it's not just about money, it's about freedom. The future of crypto will be shaped by one question. Do we let governments absorb it into the old system? Or do we build a new system that truly belongs to the people? The choice isn't theirs, it's ours. If you found this video eye-opening, share it with a friend who needs to know the truth. And for deeper insights into how blockchain is reshaping the world, visit www.ajecoin.io, where financial freedom meets innovation. This is not just about crypto. It's about the future of money, the future of freedom, and the future of you.